Hello, in this presentation we will record a deposit from receipts from customers into our Excel bookkeeping problem, keeping in mind how that same process might be done in accounting software such as QuickBooks. If you would like more information about the QuickBooks Pro, take a look at our comprehensive course in the link below. This will be the second deposit that we will be recording and therefore will go a bit faster. For more detail, take a look at that first deposit. What we're talking here about is that we have received the money from customers in typically one of two ways. One, either they gave us the create invoice, we made an invoice, and then we mailed that invoice typically, and we expect to receive payment in the mail and have now received payment, recording it with this icon in QuickBooks. And of course, we're going to first look at this item here in QuickBooks and then jump to Excel and record it in Excel. So we're going to see that we have this received payment from customers. That would record it, but note that it doesn't record it into the checking account typically. We typically set it up to record into an account called undeposited funds. That's the default account. And then we're going to go to the bank and deposit it so that it's grouped all in the same format, the same amount of deposits in our books as in the checking account when we reconcile the bank. Or what happened is we made a sale in our store. If we're selling guitars as we are here, we made a sale in the store, collected the cash or form of payment at that point in time, and then went directly to the bank at the end of the day and recorded all the monies that we have received. So in essence, what's happening is going out of the account that we're going to call the cash that we have on hand in our checking account. I mean, not in our checking account, in our check register or in our office from receipts that we've received or sales we've made during the day. And then we're going to go and record that into our deposit here. Note, however, that because of this problem and wanting to format this problem and to have like things in the same area, we aren't necessarily making the deposit every day, and we're going to group these deposits in two different formats so we can look at the groupings, meaning we're going to group two times of deposits. So last time we deposited half the items we have on hand. Now we're going to deposit the other half. So if you clicked on that deposit item, the software is just going to say, hey, these are the amounts that you have received from either the receiving it in the mail, received payments for an invoice shipped, or that has been made in terms of sales at this time. Which one of these items do you want to include, and which are you going to include when you go to the bank? And we'll just check them off, and as we do, it'll add them up, and that'll give us a total deposit of $20,500 in this case. And that's, of course, what we're going to make the deposit into the bank for. That's the amount that will be recorded on our bank statement. That's the amount that we'll have to tie out from the bank statement to our books in our reconciliation process, which will be easy if we group them in the same format here as we do in the actual deposits to the bank. Let's record this in Excel. Here we are in Excel, and we're actually going to record this as of the same date, 7/17, so we went to the bank twice today. And we're going to record the same item. Really, what's happening here is this is our undeposited. That represents all the money that we have on hand that we got in the mail and or made sales for within our store. And it's not yet in the checking account up here, which is where we will put it. Note that in book problems, we typically don't have these two accounts within the cash type accounts. We generally just have one account called cash, which would include all cash. So this is going to be a bit of a variation that is done in practice, meaning we want to make sure the checking account has what the checking account is. If we have a savings account, we'll track that separately. If we have any other accounts that are close cash type accounts, they will be broken out and then included together when we do the financials. And we might have this account called undeposited funds to help us track that money and put it in the bank in the same grouping as we will see when we record the bank reconciliations. So is cash affected? We're going to say, yeah, the checking account is going up. It has a debit balance. We're going to increase it by doing the same thing to it, which in this case is another debit. So I'm going to copy the checking account. We'll put that up top in cell L11. Right-clicking and pasting 1, 2, 3. The amount will be 20500. We're then going to credit. Now, if you see something like that, that means that the cell isn't large enough. I'm going to highlight both of these, M and N, so that they're going to be the same size, and then put our cursor right in between any of the, either here, or actually here or here. I'm going to put it right there, and we're going to make this a little bit larger, and until we can see that item. So there it is. Then we're going to credit something. I'm going to do that with a negative of that number. And there's that. Again, I need to make it a little bit larger. So I'm going to highlight M and N and drag this over just a tad so it looks like that. So, and then we have that. And then we're going to then credit the undeposited funds. Before I do that, just want to point out that that item could happen. The cells could be smaller or be too small if you have a different size of screen, or if something happens and you're adjusting the size of the screen. Mine's at 120%. If you adjust that, you could run into problems. Don't worry if that happens. Just you can change the cells to see that item. Okay, so then we're going to credit something. It's going to be undeposited funds. We're going to take it out of undeposited funds. That's a debit balance. We need to make it go down to 0 in this case, so we will credit it. Copying the undeposited funds, right-click and copy, pasting in L12, right-clicking and paste 1, 2, 3. We're then going to go to the Home tab. We're going to go to the Alignment group and increase the indentation, make it look nice, and then we're going to record this. This is the journal entry that we journalized into the general journal, which we will now go through the process of posting to the general ledger. We're going to post the checking account first. So it's the first account up here. We don't even need to freeze the panes to see them at the same time. We're going to scroll down to the new item in AM15. AM15, we're just going to say that equals this 20,500, which will increase this 105,628 to 126,128. Then we're going to credit the undeposited funds. To do that, we'll freeze the panes. So we're going to go up top. We're in cell AJ8. We're going to go up to the View tab. So here are the tabs. We're in the View tab. We want the Windows group, and we want the freeze panes within the Windows group. We're going to freeze the panes. By the way, it is worth noting these items to be able to describe them to other people when you're navigating through this. So when learning Excel, you may just know exactly where the freeze panes is. It's right there. So you just click this tab and go there, and then it's in there. But it's a lot easier to explain, especially over the phone, to people. If you can explain to them and get them to understand that this is the tab. These are tabs up top, and that's the View tab. And then these are things that people often miss, the groups. This is the Windows group. And then you want the freeze panes. That can really narrow down the search, and it actually is very useful to use those terminologies if you're talking to someone else that knows those terminologies too. So then we're going to go ahead and post this. So remember, undeposited funds is down here. It's going to be in the same order on the general ledger, as it is in the trial balance. So we're going to scroll over. We're looking for undeposited funds. Scrolling down, there it is. We're going to need to make more room within it again. So we're going to make this a little bit smaller. So see if we can see it all on one screen here. There it is. So we are on AV28. AV28. That equals, and we're just going to point to that cell in N12. That'll make this go down to 0. So let's make this a bit larger again. Bit larger, back to 120. Once again, it's a little small at 20,000. So I'm going to make this cell a little larger so we can see the whole thing. And it's N12, so if you couldn't see where to post that, I'm going to delete it and say that equals N12. So there it is, goes down to 0. If we scroll back over to the trial balance, then that should put us back in balance. And if we scroll up, we should have back to 0 in the undeposited funds, and the checking account has increased. Note, as we work this problem, even though we have these accounts here with 0 balances in the check register or in our list of accounts, then it doesn't necessarily mean if you're working in like QuickBooks or some accounting software that those accounts will show up on the financials. In other words, if you were to create a trial balance or a balance sheet or income statement, and you had 0 balances, for example, this balance went from a balance to 0, that account may just disappear on your report, and you won't see it there. You will see it still, however, in the chart of accounts. If you go into the chart accounts and look up the detail, you should be able to find it. So on ours, it's going to show up just so we can see everything in Excel, and that's part of the beauty of working this problem in Excel. You get to see how everything ties together. Also note, as we go through this checking account here, this is one of the best accounts to see debits and credits and what's happening with debits and credits. The checking account is a debit balance account, but it typically has a lot of the activity in it, meaning we can see it's going up with a debit because we're doing the same thing to it. Then it went up with another debit because we're doing the same thing to it. It went up with another debit because we're doing the same thing to it. Then it went down with a credit because we're doing the opposite thing to it. Then it went down with a credit because we're doing the opposite thing to it. Down with a credit because we're doing the opposite thing, and so on. We can also say, like a T account, typically, we add up the debits, which add up to 161, 128. So here's our T account look at it. If we add that up, we're going to say that that was 161, 128, 161, 128, and we'll subtract out the credit side of the T, which is 35,000 minus 35,000, and that gives us the 126, 128. So those are two ways that you can basically see the T account. The running balance that we have here is really useful in something like Excel and easy to do. But the T account, just adding up the debits and the credits and subtracting them, is traditionally what is done when we do something by paper, and that works quite well as well. So what have we done here? We've changed the checking account. So I'm going to go take a look at the financial statements and say that's going to the financials. That's being used to create the financials. Now we'll scroll over and see what happened to the financials, just selecting the right arrow. And there shouldn't be too much activity. The undeposited funds went down to 0 right there, and then the cash is here. Again, on the financials, typically we would actually remove the undeposited funds. When actually preparing the financials, we don't need an account with 0 on it on the financial statements. And if there were a balance in it, we should probably put that into the cash account. But this is just to show you the detail and show you how this whole thing can kind of be automated as it would be in something like QuickBooks or some type of software. And we can see the total assets here are equal to the liabilities. Nothing happened this time to the income statement. We haven't done anything to a revenue or expense accounts. Net income is still the 446. That 446 found on the statement of equity. The statement of equity ends at 158.43, same amount that we see on the balance sheet. We'll see how to put this together at a later time, but just note how it can be all automated here, and we'll see how it's automated and then how we can go back to some of the formats that were used to automate it, the general ledger, the trial balance, to troubleshoot problems if there are any.